Welcome to another team training. This is a weekly team prosperity training that goes into different parts of our business model, breaks down those components of the business model to help you build your business, whether you're working as a producer on a book of business or whether you're working on distribution through agency build out. Before we get into today's training, we want to briefly just review what we did last week. Pretty important training, power of referrals, how to grow your business, build your agency, and multiply your income using the power of referrals. And this was especially important for people that are building agencies, building national distribution or products and services. When you look at that, you have a lot of people come in, they might not have a marketing budget. They might not be comfortable creating a marketing budget yet. You don't have to spend money to grow your business. You just have to know how to learn and implement what you learn. Last week was extremely important. So you want to reference that for yourself or your agents on how to build, once again, a book of business or agency build out through the power of referrals. And then today, what we want to get into is taxes. Today's training is especially timely. That's April 15th, which is tax day. While tax season might seem like a burden for most people, for us as agents and coaches, it's actually a great and extremely powerful opportunity. It's an opportunity to show clients something they're not hearing from their tax preparers, or accountants, or their CPAs. It's not just about filing taxes. It's about finding a strategy to avoid overpaying taxes next year, the year after that, and beyond. So this is how to turn tax season into a strategy session, helping clients win by saving and building wealth. Taxes, you guys, are inevitable, but overpaying isn't. So this is how we help clients keep more of what they earn. And whether you're talking about active income, where I go in and I'm working actively for that income, or I'm talking about passive income from assets like cash flow assets, you're taxed on both. You have a gross and you have a net. Whether you're talking about active or passive income, we're talking about not ever overpaying on either side. It's your American obligation and duty to pay as little taxes as legally possible, because what that means is those taxes, those tax savings can be rerouted back into that individual or household's family plan and accelerate some of their financial goals that they're working on, whether it's debt elimination, asset accumulation, estate preservation, whatever it might be. You work hard for your money. Your money needs to be working as hard, if not harder, than you worked for it. So once again, it's not about how much you make, it's about how much you keep. I've seen people that make a lot of money that have far less in return. And I've also seen people that make far less and have way more based on their understanding of the tax code, how they maneuver around it, and how they effectively use the tax code to their advantage. Client education is our differentiator. So when you look at what clients don't know, it's what they don't know. And that's really where we come in. Let's start with what we know. Most people overpay in taxes not because they're doing something wrong, it's because they don't know what's possible. They don't understand how interest, inefficient debt, missed deductions, or poor cash flow structure are costing them, not just now, but over the long run. And if you take on both sides of the fence, not implementing and implementing some of these tax saving strategies, it makes big, big differences and huge ripple effects, either positive or negative, depending on which side of the fence that you align yourself with. Most people, like we just talked about, they're overpaying in taxes out of ignorance, not negligence. Just like when we sit down with a client and we talk about their debt situation, we talk about how much is needed to service their debt per month and how much of that debt servicing is not actually servicing the debt, but going to pay just the interest or making the bottom line of that bank or financial institution better. Same thing here. You want to pay the least amount of taxes that you possibly can, and that's by understanding the different strategies and implementing those strategies to make sure you stop overpaying taxes. These are common tax misconceptions. Number one, thinking refunds equals a good tax strategy. If you think that giving your money to the government at a 0% interest free loan for 1 year is a good strategy, You can just do that for me. I will take all the 0% loans I can, and I'll pay you back your original principal. It's a ludicrous thing to think about once you understand what's happening. Refunds are not a good tax strategy. It means you're overpaying taxes and your money's not working for you. Not knowing how debt and interest payments affect taxes. We'll get into that a little bit more in just a minute, but if you're paying and servicing debt, and if you have these interest payments and those could be removed and that money could be freed up into other tax saving strategies, you can see how this can snowball in a positive way once somebody understands what's possible, starts to implement what they learn with the strategies that we teach. And then third, underutilizing legal tax shelters and deductions. These are all common tax misconceptions that we need to address with prospects and clients and help them understand this is not the right way to approach taxes. So let's talk about this for a minute. Let's talk about the refund. I got a refund. I must have done well, like we just talked about. In reality, you just gave the IRS an interest-free loan for up to 1 year. What about my CPA handles my taxes? That's great. That's called after the fact. We focus on planning and strategy before taxes are due. So once again, it's not picking between us and your CPA. We work right alongside the CPA, the accountant, or the bookkeeper, and you will see that in just a minute. But these are about strategies before taxes are actually due. And the third common misconception on this particular page is I don't make enough to do any tax planning. In fact, the less you make, the more important strategies become. Yes, as you make more money, you want to keep more money, but as you make less money, you need to keep more of that money. So you are in a position where the tax code and what you can do with that is extremely important to make sure that you are using every bit of it as possible to retain as much of your money as possible. And that's where we come in. So we help clients understand what's possible. How do we do that? We lead with education. Hey, if you want to learn more, and that's our call to action, we offer a different conversation, one about strategy, not just compliance. And this is what separates us from the normal tax preparers, the CPAs, the accountants. And once again, we are not working as a conflict or in competition with them. We're working right alongside of them to better the client situation. Strategic solutions. So this is once we get the education out of the way and we either give them the information they need, they didn't have, or replacing that bad or incorrect information with the right information, then we move on to strategic solutions. Once we create the awareness, we introduce solutions. So it's education, then solutions. Notice we haven't talked about any products here. We're solving problems with legitimate solutions. Today, we're talking about the tax problem. And this is where our model really shines because once we educate, then we create the strategies. And then that's basically the blueprint for success. Whatever our clients do with those reports and that education, those solutions and strategies is up to them. But this is really where our model shines. We want to eliminate interest payments. And let me talk to you just for a minute about this because there's some common misconceptions here. And let's just start with one of the most common ones that we deal with on the debt side, which is the mortgage interest deduction. First of all, that's pennies on the dollar. It's not a dollar for dollar deduction. And basically what that is, the IRS feels sorry for you because you're getting ripped off by the mortgage company. So when we look at that, if we were to eliminate those high interest payments, free up that cash flow and put it into other strategies that could reduce our taxes, build wealth, you can see how the same dollar going in different directions has different outcomes. So we help clients eliminate interest on inefficient debt. And really, what does that mean? Well, less interest equals more cash flow. And that extra cash flow can be used for other strategies that are more tax efficient. And this is especially powerful for business owners or those with high interest liabilities. Why is it especially powerful for business owners? Because business owners are not W-2 employees. They don't get a check with their net income. They have cash flow coming in. And that cash flow can be incredibly powerful if we unlock it and unleash it and use it in the right way. We use tax advantage vehicles. So next, after we educate and we introduce some solutions, inside those solutions are tax advantage vehicles. We introduce the power of life insurance as a financial vehicle, especially properly designed cash value life insurance. Now remember, It has to pass a macro and a micro litmus test for the needs of the person we're talking to. But we use these kind of contracts all the time. And what it allows us is to get into tax-free, tax-free, tax-free conversations. We have tax-free access through loans. We have tax-deferred growth, and we have tax-free legacy that through the tools the wealthy have used for generations that we're now making accessible to the open marketplace, what we call Main Street. So we introduce these vehicles as a way on the backs of the education, the strategies to understand how to get these things done. And sometimes we can even do it all at once. And this is really where we come into play because we also create an offset strategy where that same dollar can be used and put in 2 or 3 different jobs at once. This creates arbitrage opportunities, helps our clients structure their finances in a way that's more tax efficient. So the arbitrage opportunity comes from teaching and implementing a strategy where that same dollar can earn interest and cancel interest at the same time, build an asset in future retirement income from the money that you're already probably going to spend anyway. And guess what? On the back end of that, you're accessing that money tax-free or tax exempt. So it doesn't matter what the tax codes are in this country, you have exempted that income and that asset from the taxes. We love working with business owners, and I just talked about one of the reasons they have cash flow over income. So we can redirect that cash flow and that income through deductible strategies, lessen their tax liability now and going forward. And then we can use things like the insurance contracts that we just talked about to reward not only themselves, but also their team. And then what that's going to do is it's going to protect cash flow while growing long-term tax-favored wealth, putting the owner in a better position, putting the employees in a better position. And by doing that, you're also putting your business in a better position by multiple points of monetization by helping that owner and their business with different types of needs they might have for their own tax liability, employee wellness, employee retention, things like that. Right now, business owners are stressed, especially those that just paid a big tax bill. This is an incredibly great time to open a conversation that goes something like this. What if you never had to write a check that big again with knowing how to offset it with smart planning? Well, if I just wrote a big check, which Alana and I have wrote several big checks to the IRS, we would love at that time, with that timely information, if you would have hit us at the right point in the past, we would have loved to talk to you about offsetting our tax liability, lessening our tax liability, not having to write those big checks with smart planning. And then what really separates our model is we bridge all this together with our coaching. We don't just give somebody the education, give somebody the strategy, give them the blueprint, and then send them on their way. We coach them to make sure that it gets done. It's not about starting something. It's about finishing and making sure everything's in the right place at the right time. Education and strategy are great, but where most clients fall short is implementation and execution. Just like on our client side, we're teaching about like the debt to wealth system, converting debt to wealth. It's not the knowledge, it's the execution. Same thing here. That's where our ongoing coaching becomes so incredibly valuable. We walk them through the process of understanding, applying, and sticking to their financial plan. And if we see them falling behind, we can give them a manual nudge to make sure that we keep them on track. So it's about having somebody to answer questions, help out with strategy, education, implementation of that education and those strategic solutions, but it's also someone to be accountable to. And that's where the coach comes in, whether you're making it happen or not making it happen, the coach plays a valuable point in that process. What can we help them do? Like we just talked about, stay consistent. If they fall off the track, we can get them back on track. We can also help them with learning how to ask better questions from their CPA. Once again, this is not designed to be in conflict with somebody like a CPA. We work right alongside their CPA and we teach our clients to ask better questions of their CPA. What does that do? It gets more value from that relationship as well. And then we explore options like tax-free retirement, arbitrage, cash flow redirection, and much more to help our clients. This is extremely important. Unless you have the credentials, you need to make sure that you are not positioning yourself as a tax professional. We are not tax professionals, but we are cash flow professionals. So you want to position yourself as a cash flow professional. And once again, we work right alongside a client CPA or tax pro. We become the bridge between what's on paper and what's really happening in real life. That's how we become irreplaceable in the client's mind, eyes, and financial plan. So here's what I want you to concentrate on. Take action this week. Taxes are on the minds of a lot of people this week. So what do I want you to do? Well, let's change that, or let's springboard that time period into good leading conversations. So here's your mission for the week. Capitalize on the fact that taxes are on the top of everybody's mind. Reach out to clients or prospects. Now that taxes are behind you, let's talk about how to keep more of your income next year. Are you interested in learning more? This is a powerful conversation starter. It's relevant, it's value-based, and it sets you apart from every other agent or advisor that's having different conversations right now. Once again, if you have the same types of conversations all the time in the financial industry, you have to compete. This is a very big industry. If you start doing things differently, having separate, different conversations, you separate yourself from the crowd and you no longer have to compete because you've got a different message, different way you do business, different way that you help that's not the cookie cutter model of so many others. So your action steps, here's what you want to do. Send follow-up messages to anyone who's recently completed their taxes. Offer a free financial strategy focused on cash flow and tax efficiency, and then run reports with the intention of showing how to redirect dollars from debt and tax loss into wealth creation. This is a great cycle of communication right here. And once again, if you're just a marketer in our model, all you got to do is open the conversation, put it on our calendar, you're good to go. If you're doing the entirety of this, I'm showing you how to open the conversation, continue, and direct the conversation into where you want it to go, which is the next action steps. You can even right now create a mini campaign, and you can use it around this time of year, next time of year, the time of year after that, right around tax time. This is a main theme. Using text, email, social media. Hey, tax season is officially over, but planning season is just beginning. Save more on taxes, keep more of your money, build wealth, command your cash flow, all the things that we talk about. Be relevant in what you do, be timely in what's going on, and learn how to use things that are happening around you to help market your business in a way that's effective. So here's your checklist to close out the meeting. Here's what we're going to close with. You need entry points. Everyone pays taxes, but your clients don't have to overpay. Most people have no idea they could be doing so much better, and your role is just to open that door. And once again, call to action is learn more. You don't need to be a CPA to change someone's financial life. You just need to know how to connect the dots between strategy, education, and implementation. So you're looking for entry points about ways to help people understand how you help people like them do what it is you're trying to do. Save on taxes, create wealth, avoid taxes, build cash flow, whatever your message is at that point. Let's use this moment, which is today, tax day, to start new conversations, reconnect with some of our old clients, and create real value for those conversations. Help people reduce their tax liability, eliminate waste, and build long-lasting wealth. And you'll build a business that not only grows fast, but it lasts a very long time. Once again, if you create a model where you're doing something that's irreplaceable, you're not going away, and quite frankly, you're going to attract other agents into that model to teach them how to position themselves exactly the same way. And I'll leave you with this. We're not giving out free tax advice. You need to consult your tax advisor. You need to make sure that you're extremely careful in how do you position yourself for compliance reasons. We don't give tax advice, but we do show people how to use legal, proven financial tools that align with the tax code to avoid as much present and future tax liability as possible.